Okay, so now with this video, we shall see some entries and exits. How do we enter the market? How do we exit? Yes, to our TP. Okay, so now how do we put, where do we exactly put our TP in our stop loss? Okay, so watch it up the end so that you don't miss anything. Okay, so now with this video, we shall see just a simple concept. Okay, and that is we shall in that concept we shall add fair value gap, shall add market structure shift and order flows. Okay, and we shall add break of market structure. So see things like that. Okay, so now I'll just go directly into a video, right? So now first of all, whenever you open a chart, the first thing you have to do is to look at the market structure, to look where the market is going. Is it a bullish market? Is it a bearish market? Okay. So now for this case, this is a bullish market. Why? Because it makes higher highs and higher lows. Okay. So now the bullish market always it has to be making higher highs and higher lows, guys. Okay. So now as you can see right here, this was a low and this was a high. This was a low here. So this is what we mean by a bullish market, right? So now we shall also add a top-down analysis up to our entry time frame. Good. So now this is the bullish market because it is making higher highs and higher lows, and these are the breaks of market structures it is making. As you can see here, this was a break of market structure right here. Okay. So now these breaks of market structures, they are the ones that to confirm to us that yes, we are a bullish market, guys. Okay. So now let's see. Yes. You remember always the market forms lows and highs. Okay. So now, for example, here, this was a low right here. Okay. This was a low right here, right? And just know that the buyers entered right from here, right in this low. Okay. And we want to see that what made those buyers enter from that low. That's what we call uh, top-down analysis. We want to see how they enter from there, guys. Okay. Yes. So now we are here. Okay. We are right here. Okay. So now this was a break of market structure right here. Remember, I want to see why they entered from here. Okay. So now, after confirming that yes, we have our break of market structure, what is next? Okay. So now, remember, this was a low right here. This was a low. It formed right here. This was a low. Okay. And this was a high. This is a high. So now, after getting this, remember now we have got our range. We are trading in. Okay. This was our range. Okay, because of that high and this low right here. Okay. After getting your range, always you can also pull out your flip tool. And this Fibonacci retracement tool, it will confirm to you that yes, I have to trade from either premium or discount. Depends to the direction you are trading in. Okay. So now after this, you can also mark out your 50 fib level. Okay. So now, and you said this is my 50 fib level. Now you can remove this, right? So now this line, let me change the color of this line. Okay. This line right here will confirm to us our 50 fib level, right? So let me change it to red. Okay. So now when the market comes down here, right here, okay, it will confirm to us that yes, we are in our discount level, right? So now remember this is your range, and in your range you have to mark out your zones in your discount level, right? So now here we mark here at the fair value gap. It was in our discount level right here, and also we mark our order block right here. It was also in our our discount right here. Okay. Also, I make sure you mark all the zones that you can be able to see. Okay, because the market can turn from any zone. So now here you have to make sure that you mark all the zones that you can be able to see, guys, right? So now, for example, those are the zones I've marked on my higher time frame I use for analysis. So after that, you go to your 1 hour time frame. Remember, we are doing some top-down analysis, right? So now here you go to your 1 hour time frame for the shift, right? So now, for example, you wait for the market to come and tap into your first zone right here. Remember, this was your first zone. This was the fair value gap. But when the market came to your fair value gap, you see any shift in market structure? No. Okay. You don't see any shift in market structure right here. Okay. So now also, when you see here, this was an order block that we drew here. But also when the market up here, we don't see any shift in market structure. We don't see any double bottoms. Okay. So now it means also we should wait for the market to come to our zone, right? So now here, until the market came to this zone down here. When the market came to this zone down here, right here, this zone right here, okay? So when it reached here, it gave us a confirmation, right? So now you can see here on your 1 hour time frame, there was this zone right here, okay? There was this demand zone, okay? This order block, right? So now when you go to your 15 minute, that is your entry time frame. You can use linear time frame or you can use a 5 minute time frame, right? So now when you go to your 15 minute time frame, can you see the shift in market structure? Yes. So how? How do we confirm the shift in market structure? Okay. So now remember, there was this internal structure that it was making, right? It was a bearish one, right? So now that was a higher low, and this was a lower low right here. Can you see this? Okay. Can you see this shift in market structure? We always use, right? This shift in market structure, guys, right? So now it is right here. The market just made a shift in market structure. You can see it, okay? Always we use this as a shift of market structure. For example, now the market was bearish trend internally. So now after confirming that yes, it was bearish trend internally because of higher lows and lower lows. So that's when it left this higher low. Then after leaving this higher low, the market later came and broke that higher low. So now after the market confirming that yes, it broke that higher low, that means we wait always for the comeback of the market to your zone, okay, before you enter, right? So now it is right here, okay, it is right here. Let me first remove these zones. Okay, so now we are here, okay. This one, this was right here, okay. Can you see this? It just made this, then it broke it right here, as I showed you there in the example. Then after breaking it there, this is when it came back to your zone right here, and it bought after making that shift in market structure. You can also call it a change of character, guys, right? So now also those ones who missed that entry, you can also see this entry. It was clear, very very clear. This other entry. So now it started making higher highs and higher low, and that is a high right there. Can you see when the market broke that high? It came back to your fair value gap right here. This was a very big fair value gap. So the market, yes, it came back and it gave us another entry. Okay. So now those people who are really patient can do wait for a comeback of the market to any zone that you can look at. So now that's how we caught that trade, and you can see it was a very very good risk to reward trade, guys. Okay, so now also you can be trading these internal structures, right? These internal structures, they are also very nice to